Hello friends, this is Vijay Bamvani, and in this video, I want to discuss a very critical aspect of trading and a decision that we have to make on a day-on-day basis. When we see a market fall, is the market falling to fall further, or is the market falling to rise at a later date? Which means, should you be basically selling out your holdings, or should you be adding on to them in a buy on dips scenario? Unless you get this equation right, I think you're going to run into trading losses, because whether we should be buying or whether we should be selling actually determines whether we are going to be profitable or loss making. All right. But before I proceed, I have a sincere request. We are pure traders, prop traders, and we focus on understanding the markets and trying to deliver systems and create systems and statistical models which help us navigate through the markets. We understand that pretty well. What we are lacking in is the reach. And I would count on you to basically reach out to like minded people. If you could merely share our videos and our work, our WhatsApp broadcast, which you can get from the number up there free of cost. And some of you have sincerely told us that since my work is good and profitable, they would rather not share it and keep it to themselves. I think, in my humble opinion, this is a mistaken notion. For any system to work better, it needs more and more people to trade that system. And I am not going to, and my system will always be free of cost. It will be put up in the public domain. So this is not something that I'm trying to sell to you either now or at a later date. So help me out, please. Now let's plunge onto the topic at hand. Is the market going to rise, or is the market going to fall further? Now, so far I've shared with you some studies from the very first module of the IBEX, the trading system that we work on, and you've seen the scratch of the surface kind of studies that we are capable of generating. We are currently working on the third module. We expect to finish the sixth and final module unless we add something else to it at a later date. The sixth module is slated to be finished by 31st December of this year. Give us some more months of beta testing, and by June 2023, we are up and running. And yes, we are going to share the studies with our friends here. So, of the first module studies that you have seen so far, I would request you, as a matter of fact, to focus on three studies that can help you gauge whether the market is going to fall further or it is falling only to rise at a later date. The number one study, and the simplest study, you can even call it DIY, do it yourself study. This is the advanced decline indicator. It's something that I have shared with you in the recent weekly market outlook video. All it basically does, as you can see on your screen, is take a ratio, or the number of advancing shares versus the number of falling shares. As long as the number of declining shares are higher, it tells you that the market is finding equilibrium, or it is trying to seek lower levels, and there is a possibility of further declines. Now, you will take another weight of evidence. You see, when we go to a doctor, and many a times a doctor prescribes some radical line of treatment, like say a surgery, you don't really rush into a operating theater. You basically want a second or maybe even a third opinion. So let's take a second opinion from one more study, which is something that I have been sharing with you for many, many months, and I have received extremely good feedback about the impetus chart. Now, if the impetus chart, which you can see on your screen, is also indicating bearishness, you have 2 out of 3 studies which are telling you, hey, the markets are headed lower. All right. Now, the weight of evidence starts to pile up. And as the weight of evidence piles up, and remember, these numbers we take from the market data that is given out at the exchange platform. You know, words can be deceiving. Opinions can be mistaken, but statistics will only honestly report what has happened in the market. So, like a forensic surgeon or somebody who does postmortems, it depends on the cause and effect theory. Now, if two out of these indicators, based on numbers that we get from the marketplace, are telling you that the markets are headed lower, that's precisely where they could be headed. All right. Now, the third and final study, the lift, weight, thrust, drag indicator. This is something that I have sent out to many of you on the number specified above. If you can just send me your name and email ID, I'll add you to our broadcast list free of cost, of course. You have seen how the lift, weight, thrust, drag indicator has worked out for you. I even gave you a strategy of a simple exponential moving average system, which I thank many of you for having given such superlative feedback on. I'm here to help you, and I'll continue to handhold you and provide you better systems, very simple ones, never too complicated for you to follow. Now, if the lift, weight, thrust, drag indicator also is pointing downwards, then the markets are likely to go even further down, and you should not be committing good money after bad by buying the dip. Let statistics, which are unemotional and extremely objective, do the work for you. Why conjecture, why guess, and why get into something that we could basically be only having a probability of success when statistics are actually giving you a superlative edge? Am I done here? Am I done with all the studies that are required and I'm going to share with you? Not at all. We've just begun, and me and my crew at my command center, because I think trading is warfare, we use techniques and terminologies of warfare. So we don't call it an office, we don't call it a den, we call it a command center. So me and my crew at the command center basically are going to bring you a lot more stuff. Stay tuned. Don't get off this train. You're welcome on this journey together. And if you have a question about, hey Vijay, do you really trust your own indicators? Hey, that's what I really made them for, right? We make our money from the markets, trading the markets. That's what we are here for, which is why we are able to give you this output completely free. So would I trust it every single day of the week and twice as much on weekends? Because we keep on sharpening our knives, our tools, and our statistical models on weekends so we can do even better in the coming week. And you are welcome to ride this train. Friends, before I sign off from this video, a gentle reminder to subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. In the comment section, a word of encouragement, maybe even some inputs, criticisms, something that can help us become better are always welcome. And last but not the least, help us reach out to more and more people and get systems-based knowledgeable trading become the norm of the day. Thank you for your patience. Do take very good care of your trades, your money, and your health. This is Vijay Bambwani signing off for now till we meet again in my next video. Bye-bye for now.